Right, traders, welcome back to the channel. Here we have the 4-hour time frame of US 30, and we're going to be going over some New York tips and tricks that you can implement into your trading, right? So as we know, the US 30 primarily moves during that New York session, right? So what do I mean by the New York session specifically? So when it comes to ICT, we're of course trading time and then price. So what is the hours that you need to be trading the US 30 in particular? So if you're in New York, so Eastern Standard Time, you want to be trading essentially from 9 a.m. to 12 a.m. as an absolute maximum. So 3 hours as an absolute maximum. You need to understand that the indices market opens at 9:30 Eastern Time anyway, so you can get to your charts at roughly 9:30 Eastern Time, and most people are done by half 11 Eastern Standard Time, right? So if you're in the UK, so that's in sort of my situation over here in the UK, you're going to be trading from 2:30 p.m. up to 4:30 p.m. So these are sort of the hours that US 30 operates in, and I'm going to be dissecting to you a higher time frame outlook and lower time frame trades that could have been taken on US 30 using a New York strategy, ICT concepts, time and price on US 30. So without further ado, let's get into the video. Okay, so the first thing we start with is structure. So how am I looking at the structural highs and lows? What makes up my structural highs and lows, right? So the way that I mark out my structure is quite simple. What I want to look for is I want to look for a sharp move down, sharp move up, sharp move down, sharp move up. So you're looking for those sharp moves in the market, right? So if I just bring this over here, you're looking for those sharp moves in structure. So how am I seeing structure, right? So we have a sharp move over here, sharp move up, followed by a sharp move down. Notice it's the lowest point before the high gets broken, right? So a sharp move up, sharp move down, and now a sharp move up. Now, some people might ask me, why didn't I mark out anything over here? Well, I guess you can, but this is more sort of M15 structure. But if I were to mark it out on the 4-hour time frame, just to be a bit more accurate, sharp move up, sharp move down, sharp move up and then down, up and then down, up. Then we had a minus sweep over here, minus sweep of liquidity over here, before ultimately giving us our new dealing range to work with. Now, what do I mean by a dealing range? Something I go over in every video. A dealing range is quite simply the distance from the low to the high. The most current low, which is down here, the most current low up to the most current high, which in this market coincides with the all-time high. So we have a low down here and we have a high up here, right? So what do we understand by that? So once we have our structure established, we move on to identifying the premium and discount or the PD arrays. Very, very important to understand. Now, using the Fibonacci tool from an ICT perspective and understanding your PD arrays, your premium and discount arrays is one of the simplest things you can do once you've done your structure. So I repeat, once you've done your structure, right? You're going to have a swing low down here and a swing high up here. And this gives us two regions to work with. It gives us a premium, which is up here, and it gives us a discount, which is down here. Okay, so what can we do with this information on the intraday timeframes, i.e. the M15 timeframes? Well, here's what you can do, right? So what we understand is once we have our dealing range established, right? So once we have what we call the PD arrays, so we of course have our Fibonacci tool projected from the swing low up to the swing high. Once we have a premium up here and a discount down here, what we're looking for is we want to be looking to sell into a discount, and then we want to be looking to buy up again into premium. So I'm going to be dissecting a buy trade and a sell trade, which take in this concept into account, right? So we want to be selling in the premium. So you want to be selling into discount, right? Premium, right? So in the premium, we want to sell into discount, right? And in the discount, what do we want to do? Once prices come into a discount, we want to buy into, you guessed it, the premium. Very important to understand. These concepts are going to be used on the M15, and not for this video, but for the purposes of my students on the lower time frames. We use this on the lower time frames to get involved. So it's higher time frame analysis and higher time frame direction, and lower time frame confirmations and lower time frame entries. So with that being said, let's go down to the intraday time frame, so the M15, and I'm going to be dissecting a sell trade, which will be from this zone into a discount, and then from a discount we're going to be looking to buy up back into the premium. Okay, so with that being said, let's go down and analyze the markets. Okay, so the first trade we have, was over here in this region over here. So this region gave a sell, right? We saw a sell trade in this region. So why were we looking for a sell? So this is our 4-hour equilibrium, like I said. So anything above this EQ is premium, right? So this is how you could have got involved in a sell trade, right? So if I get rid of this, so you want to understand first, right, when it comes to looking at the markets, we have what we call the Asian range. I go over this in every single video, and it is the accumulation stage of the market. Very, very important. So this is the Asian range. Okay, so the Asian range is the accumulation of the market. The reason why is because it accumulates, you guessed it, liquidity, right? So it accumulates liquidity in those markets, right? So we understand we should be looking for sells. So when it comes to when we look at sells, we want to be looking for a bearish order block. So what constitutes to a bearish order block or any order block as a whole? So when we're choosing OBs, there's three rules we have to follow, right? And I'm sure most people know what they are. We want to see a shift of market structure. So we want to see an MSS or a market structure shift. We then want to see a fair value gap in the New York session, which is something I'm going to highlight to people now, and we want to see price in the premium because we're looking to sell. So we understand we're in a 4-hour premium. So we understand we have a higher time frame premium that we can look for sales from. Very important to understand that these three rules over here must be met before an order block is established, and therefore we can sell off a bearish order block. We're going to be integrating this with the power of three, and this is what I mean by that. So first we're going to see price create an Asian range or an accumulation, right? Then we're going to see in this steps, this is one of the entry models I use. We see what we see is we see a two-phase manipulation. So we see a sweep of the Asian low, then a sweep of the Asian high before creating the high of the day. So the Judah swing up here before a shift of market structure. And we enter off an OB just like this, okay? So to break this down pictorially and schematic, based off schematics, we have an Asian range over here, which I'm going to mark out in orange. We have our two-phase manipulation. So price sweeps the Asian low first, okay? So if I bring this to people's attention, price sweeps the Asian low first. Now, when price sweeps the Asian low first, what's it achieving? By sweeping the Asian low, the market manipulates early sellers into the market. Now, those early sellers get swept out of the market when price creates the Judah swing. So the Judah swing is the high of the day, right? So this Judah swing corresponds to the high of the day, typically made in the New York session, right? So 3 p.m. UK time, which is 10 a.m. Eastern. So the Judah swing, right? So I had a question. I think I think it was either one of my private students or someone on the channel commented, liquid FX, where can the Judah swing occur? Well, typically I do say to people, look for the Judah swing in the London session, but that's for the Forex pairs, right? So when we're trading Forex, things like pound, euro, GBP, USD, euro, pound, euro, dollar, things like that, the Judah swing typically occurs in the London session. That's not to say it can't occur in the New York session in the Forex pairs, but when you're looking at something like US 30 or the S&P 500 or NASDAQ, typically speaking, you're going to get that Judah swing in the New York session because the volume kicks in after the indices open at 9:30 Eastern time or 2:30 p.m. UK time, right? So it's important to understand a Judah swing occurs in line with the New York session, okay? So now, what's the next thing we look for in our schematic? Well, you guessed it. We want to see a shift of market structure, a fair value gap, right? Because we already have our higher time frame premium aligning up, right? So once we have a shift of market structure to the downside, right, I'm going to label this MSS. Some people call it a BOS, a break of structure. That's perfectly fine. It's the same thing. Now, from this particular region, you need to key off a fair value gap, right? You need to key off a fair value gap. So your fair value gap will be somewhere near the Judah swing like this. For the schematic, I'm going to label it here. The blue box here represents a fair value gap, and your job is to quite simply key off a fair value gap, okay? Targeting that London manipulation low over here, right? So this is the London session low, which represents a clear pool of liquidity. So I'm going to label this LL low, or just L low. So the London low over here, right, is what you need to be targeting using this particular schematic. So this is one of three entry models that I teach to my private students at Liquid FX. And this is something I'm teaching to you, but we're going to be using it on the M15 time frame just to avoid any complications. So this is quite simply how this entry model works. So if I take you to the charts now, we begin to dissect how price action actually moved on this day, right? So we see a very clear fair value gap just over here in the New York session, highlighted here in blue. So our job now is to simply key off the fair value gap, right? Key off the fair value gap. Now, a safe place to keep your stop loss for me will be just at the Judas swing high or slightly above the Judas swing high, just to keep in the trade. And where do you target, right? The London session over here, well, actually, this was the New York session, right? But pre-open, pre-indices open, right? We see the low get created, right? This low is simply liquidity, and we use it to target over here. So this is a nice 1 to 2 trade. But why would you hold it past here? Well, the answer's up here, actually. The answer's back on the 4-hour time frame. We understand that we're trading from premium down to discount. So the question is, why would you look to hold it? Now, the reason you'd look to hold it is quite simply you have a discount to target over here, right? So you can hold this trade a little bit longer. I personally don't hold more than a 1 to 3. So this trade did run to 1 to 3. So 2.5 hour to 3 hours, a perfectly great trade here on US 30 or just any other asset class with the way that ICT models work as a whole. So this is a sell trade that you could have taken on US 30 on Friday the 8th of March. So very clean sell trade over here using the basic concepts of accumulation, manipulation, and sorry, distribution, right? Now we're going to dissect the same exact principles and trade, but it's going to be in reverse. We're going to be looking at a bullish scenario now. So here's how we're going to do it. Of course, we start off every single day with the exact same model over here. So we first start off with what we call Asian session, right? Or the Asian range. Now this builds liquidity in the markets, right? So now you need to understand, what does price action actually achieve from this level, right? So we see price first coming up above the Asian high. Now, what does the market do? What does the market achieve by doing this? Well, you guessed it. This is manipulation phase one. Manipulation phase one. This is what I call it in the community, right? So this is one of the entry models we use. A very, very powerful entry model, especially when when you do it on the lower time frame. But here we're sticking just to the M15. We have the manipulation phase one over here. Now look what price does, right? We see the Asian low get swept very, very aggressively. Now, why do you think the Asian range low gets swept over here? This is manipulation phase two, right? This here is the low of the day, which very typically occurs in that New York session. So here it was on the 8:30 a.m. New York time, another typical time for the low of the day or the Judas swing to form. This occurs below the Asian session. This is manipulation phase two, or quite simply, as how a lot of people call it, is the Judas swing or the turtle swing, right? Or simply just manipulation. It's all the same thing, right? We need to see a sweep of liquidity in the opposite direction. Now from here, we see a clear shift of our market structure. So we see price displacing, giving us a large volume shift over here, a large shift of structure. So we see a shift of structure, right? So these are our three rules over here. So we see a shift of structure, right? Rule number one. Rule number two, a time-based fair value gap. So we're in the New York session now. So what we're looking for, we're looking for a time-based fair value gap to key off. Now here, it is clear as day. I don't think anyone can miss that. Anyone who's been doing ICT concepts for even 6 months will be able to see there's a fair value gap just over here. Time-based fair value gaps, people, is what we're after, right? Time-based fair value gaps. We have a very clear inefficiency over here. So this is our third rule. Sorry, our second rule. And our third rule is the fact that we've had a higher time frame discount. So we're trading from discount to premium, okay? So we have our discount rule that's also been met, right? Just to make things a little bit clearer, if we look at this internal structure over here, we have an internal structural low over here, and we have an internal structural high over here. So where do you want to be looking to buy or sell from? It's quite simply below this 50% level, right? So you could have your stop loss slightly below the 50% level over here, keying off this fair value gap over here. Again, safe stop loss will be either at the Judas swing, or you can have it slightly above in this case, because we haven't got any inefficiencies priced to target over here. And again, this trade turned out to be a 1 to 2 or 1 to 3, I believe. 1 to 2, 1 to 3, I believe, something like that. Yep. So another excellent intraday position that could have been taken. So notice we have a sell trade, which gave us a 1 to 2 or 1 to 3. And we had a buy trade, which also gave us a 1 to 2, 1 to 2.5, right? Quick little nuance about this trade, right? Targets. Another question I get as an educator: where do I target? Where's my TP? How do I find my TP? Right? TP changes regardless of which trade you're looking at. Every trade has a different TP, and the reason for that is because every trade will target a different area of liquidity, right? So just to bring to your attention over here, we had this PWH, or previous week high. So this was back on the Friday the 1st of March, right? this trade was taken on Tuesday the 12th. So the previous week high from Friday was the main target for this trade, right? So you need to understand where the previous day highs, where the previous week highs, and these are also areas that you can use to your advantage when it comes to finding TPs, right? So if you like this video, give it a like and thumbs up. And I just want to mention that we are offering free one-to-one sessions to anyone at Liquid FX who is interested in taking their trading to the next level. But until then, happy trading, and I'll see you at the next one.